Hey everyone, I'm receiving a ton of questions. They're all about Starbucks and their recent earnings report for fiscal Q2. They go like this. Hey Ian, is Starbucks now just a loser stock? Hey Ian, is this the end for Starbucks? Hey Ian, after this bad quarter, will Starbucks stock ever recover? Ian, is Laxman even a good CEO? Is he going to be able to turn this thing around? I'm receiving so many questions like this every single day. Let me think about that for a minute while I sip some of my Starbucks coffee. Oh, that's good. Wait a minute. I'm going to think about that some more while I sip some of my wife's Starbucks coffee. Not bad. Wow, that's good. Of course, I'm not selling my shares. Of course, this isn't the end of all time for Starbucks. But I have a guest today. Boop, 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 boop. Who is this? What? I've got a bear on my shoulder. Wait a minute. Is this the 2003 commemorative Bearista? The commemorative Starbucks Pike Place bear? This guy is really special. Let me ask him, hey, is this the end of all time for Starbucks? What do you think? Boop, boop, boop. Of course not, Ian. This is not the end of all time. Starbucks is the greatest. Get ready, everyone, for an exciting dividend stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. Of course, I'm not selling my Starbucks stock. In fact, I just bought some more. I'm going to share that with all of you in a minute. I'm reinvesting dividends. I'm holding for the long term. I'm a long-term investor. I'm not going to just sell over one bad quarter. I realize that business, it's not linear. Business has its ups and downs, but I understand over the decades that this is a company that will continue to thrive and continue to grow. And in fact, I believe the market cap at some point in the future, looking out decades into the future, could hit $200 billion. But I want to take a step back, just talking about this scenario. There is so much madness out there right now. It's really interesting to me because let's look at some analogies. If you were going to the gym and exercising and you missed just one workout, would you quit the next day saying, hey, I missed that one workout. I guess I shouldn't get out of bed again, shouldn't work out anymore. Or think about dieting. Think about eating on a healthy meal plan. And then one day you kind of have your cheat day. You eat a pizza, if you will. The next day, do you wake up and think, oh, I guess I did not so healthy things yesterday. I'm just going to eat pizza every day now. Or think about back to when you were in school. All of us have gotten a bad test score. If you got a bad score on a test, would you just give up and say, hey, I'm going to quit this class, or I don't have what it takes, so on and so forth? That's how I'm looking at Starbucks right now. This is a company with an excellent track record, and they had one bad quarter. Now, it was a really bad quarter, and the results were a little bit shocking. I wish they had done almost an earnings warning or a preview to us shareholders. The fact that they did not do that after having such a good quarter last quarter shows that things are really in flux. And I think that's to be expected with any investment these days, that the world we live in, it's very dynamic. It's very real time. There's a lot of things happening very quickly. And as investors, we all need to be ready for the ups and downs that can come with the world that we live in. And it's a reminder to me as well to remain diversified. And that's why I love ETFs like SCHD as well. That's top of mind for me, just to add more diversification to my portfolio. But no, I'm not selling my Starbucks shares. And so what I want to do is I first want to share with all of you what I am doing. I just bought some more. So check it out on the screen right now. I'm going to go really quick. But as you can see here, when it dropped like 16%, I think it was, in one day. It was pretty crazy. I went ahead in that morning and I bought more. And I've been so busy at work, but I took time for this. I bought more at 74.91. So it's now down about 31.7% from the 52-week high. Now, what I want to share with all of you is Starbucks is giving new guidance for fiscal year 2024. And they're basically saying, I think, as I interpret the numbers, and I'll share them with you on the screen in front of you right here. What I am interpreting out of all of this is that, hey, revenues are probably going to be flat this year and earnings are going to be flat when we compare fiscal 2024 to fiscal 2023. It's going to be a flat year. It's a challenging year right now at Starbucks. Now, in Q2, we were actually seeing downward pressure on earnings, but I remember back in Q1, it was up from last year. I think what they're saying is when we average out all the quarters throughout the year, they're seeing kind of flat revenue and flat earnings and maybe some single digit growth in there. That's how I took those numbers. So when we go back to the prior screen, as you can see in front of you right now, what I'm doing right now when I analyze this stock is I'm just saying, okay, my 2024 EPS estimate, it's just going to be flat with fiscal 2023, so 358. And that puts the forward PE on the current share price after it's corrected at a 20.92. And so it's not trading, I would say, at a bargain basement valuation here, but I think it's a fair valuation for what it is. And so I'm adding shares here, and if it trends down more, I'm happy to add more. If it trends up a little bit, happy to add more. Like I said, I'm a long-term investor, so I just dollar cost average over time. I'm looking at the big picture. I don't really care if it's in the 70s, the 60s, the 50s, the 80s, the 90s. It really doesn't matter to me because when I look decades into the future, I'm looking at a $200 billion company. I'm looking at a global enterprise that is continuing to expand overseas in markets like China, which are going to take some time. And it's not just going to happen overnight. But I have the faith in the company and I'm sticking with it over the long run. And I think they've already proven to all of us since they started in 1971 that they have some staying power, as you saw from my commemorative Bearista. But as you can see in front of you right now on the screen, I have a few more metrics. The dividend is 57 cents a quarter or $2.28 a year. The starting dividend yield, it's now 3%. That is pretty rare for Starbucks, so I'm being paid to wait here with a yield like that. Payout ratio is still reasonable at 63.7%. The 9.6% compound annual growth rate of that dividend per year on average over the last 5 years, I expect that the next increase, it'll probably be a little bit lower than that. Why? Well, the results were not really good recently, and so it would be prudent for them to taper back on dividend growth and maybe bringing it up higher in the future. Now, the market cap right now is only 84 billion, so it's trended down quite a bit as of late, especially with how the stock just tanked. But I want to take a step back here, and I have 3 bullet points that I want to share. The first one I want to share with all of you, it's not even about Starbucks, it's about McDonald's, which is another stock that I own. McDonald's back in 1999 through 2006, it traded kind of down and then back up. It was basically flat. This company went nowhere. And I'm bringing this up because I remember this point in time. I wasn't in McDonald's just yet. I bought it in 2011, but I remember tracking it around this time. And I remember there was a lot of fear around this time if it was the end for McDonald's. Could they get through this? And it took a good 6-7 years really to break free. It took some time for it to break free of the problems that it was facing back then. And that's a reminder to all of us here. There's a difference between long-term investing and trading. I am a long-term dividend investor. I'm being paid to wait. I understand business is not linear. It was not linear for McDonald's. As you can see on the screen in front of you right here, here's a stock chart of McDonald's. You can see at its peak in 1999, it was at $41 a share. 2006, it finally surpassed that $41, but investors had to wait. Boy, would it be frustrating if in this day and age, we looked back in time and an investor happened to buy in this time period McDonald's and then sold. They lost the faith because now McDonald's is at $273.28. By the way, I bought it $73.53 in 2011, so I'm doing really well on that stock. But I don't really care about capital appreciation, but stock price is important because it's indicative of how well the underlying enterprise is doing. Of course, as the stock price gets higher, it's a reflection of the success of the company because the market tries to price the value of the enterprise. And so between 1999 2006, the market believed, hey, McDonald's, your business isn't really worth any more than it was the year before. And it took them a lot of years to get past that tough period. If you go back in time and you look at Starbucks, it's actually had some periods like this over the years as well. Growth does not always happen in lockstep, one after one after one, year after year after year. There are periods of ups and downs. But what I do want to say so far is honestly, this is just one bad quarter and it looks like this year is going to be flat with last year. But that brings me to my next point. Let's take a step back and let's look at fiscal 2023. What happened at Starbucks in fiscal 2023? Check it out on the screen in front of you right now. They broke records. It was an amazing year. Consolidated net revenues were up 12% to a record $36 billion. Or 14%, excluding a 2% unfavorable impact from foreign currency. Now, also worth noting, GAAP earnings per share of $3.58 grew 27% over the prior year. Non-GAAP grew 20% over the prior year. We're looking at 2023 as a stellar, amazing year. So, kind of how I'm looking at this is they grew so fast in 2023 that a lot of that growth honestly is probably being digested right now, and they're forming a new baseline, a new kind of plateau before a next leg up in their journey. Another way to look at it is business growth is not linear. They grew GAAP earnings 27% in 1 year. If I just divide that in half, I get 13.5% per year. You could kind of say, hey, half of that came last year, half of it's coming fiscal 2024, and the 13.5, I know I'm not compounding, I'm just doing a simple division here, but that's pretty respectable growth year over year over year. And so what I'm saying is a lot of their growth was front-loaded in 2023. So to see that happen again in 2024, it would be nice. It looked like they were on that path from Q1 when I looked at the Q1 results. But unfortunately, that's not the case. But still, just averaging out the 2 years, they're doing pretty darn well. And that's actually the third point I wanted to get to and close out today is Q1 versus Q2. Let's look at that for a minute. So as you can see on the screen in front of you right now, here is Q1 from their earnings. And so this is Q1 of fiscal 2024. And you can see it was a really great quarter. Consolidated net revenues were up 8%. It was a record. GAAP EPS was up 22%. Non-GAAP up 20%. The reinvention program is unlocking continued efficiency. It was a really good quarter, and that was just 1 quarter ago. But how quickly things change, as you can see on the screen in front of you right now, here is fiscal Q2 of 2024 for Starbucks. And this is why everyone's so concerned right now. They're noting a complex operating environment. Revenues were actually down 2% year over year. And the EPS was 68 cents. That 68 cents was a decline of 14% over the prior year. But again, they had a good quarter Q1, bad quarter Q2, and it seems like they're having some issues on the revenue side, but even more issues on the earnings side with cost pressures creeping up and margins getting squeezed a little bit there. But like I said at the beginning of the video, I'm going to see how this story plays out over time. I'm a long-term investor. If Q3 is bad, if Q4 is bad, if Q1 of next year is bad, I'm sticking with it because I believe in the fundamentals of this company over the coming decades. But I think they actually actually have some strategies that they will be employing in the coming quarters, and I believe that they will probably right this ship. But I also think it's a sign of the times. This is a very dynamic world that we live in, and the fact that the numbers at Starbucks can swing like that so much quarter over quarter just shows the environment that we live in, that times are changing, that things are a little bit interesting right now. But I am sure that anyone that was analyzing McDonald's between 99 and 2006, there were probably a lot of similar concerns back in that era. All right, everyone, please put in the comments below, what do you think? Terrible stock, you're selling it, or great stock, you're holding it, keeping it, buying more? Share whatever you're doing in the comments section below. I'd love to hear. If you enjoyed the video today, please go ahead and click the like button. It means the world to me. And before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my personal journey here on YouTube for fun and entertainment. If you're going to go out and invest in the stock market, please consult your licensed financial advisor first. I'm just sharing my journey for fun and entertainment. It's possible to lose money in the stock market. In terms of a full disclosure, I am long Starbucks, SBUX, I am long McDonald's, MCD, and I'm long SCHD ETF. I own those 3 positions in my personal dividend stock portfolio. I will see you in the comments below, and I'll see you in the next dividend stock investing video.